Hey, it's Anthony with Land Title. I wanted to bring your update for Greater Denver Metro in the month of October, and always exciting things going on. One thing you'll notice here is we're seeing a seasonal increase in active units of inventory. We're definitely seeing a drop off in our under contracts as well. So what's really happening out there in the marketplace? We have 7,000 units of inventory, relatively, short, relatively small, but we have 3,000 under contracts a month, which is much slower than we would expect or we would like to see. So when we go over to active units, this is kind of what you're seeing, right? Every county is a little different, but as a bulk, year over year, we're down about 25% in active units. Places like the city of Denver are pretty flat. Other places, maybe a little bit more, like think Jefferson County. A little bit less inventory because it's still pretty competitive out there. When you talk about the month supply of inventory in the marketplace, there's only 2 months of inventory. This truly should feel like a buyer's market a seller's market in many cases. But the issue is that there's just not a lot of buyers out there in some cases. So it seems so pocketed, almost neighborhood by neighborhood. Some will be going with bidding wars and others will be sitting on the market because there's competition. So it doesn't seem to be any rhyme or reason to which one it is, but it's just really driven by the local supply. So really double check and look into those local insights that we look at. When you look at it by the speed of the market, though, right, days in MLS, there's a fairly big difference between a market like Broomfield and a market like Elbert County or Adams County, right? Some of those places that are maybe a little bit more desirable or a little bit closer to city centers where people are working are moving faster, right? You're starting to see it increase. It's definitely going to increase throughout the rest of the year because that's fairly normal seasonal behavior, but we're really only at 30 days in MLS. This compared to pre-pandemic times, back when things were a little bit more normalized, we're still in a fairly fast-paced market because active to under contract time in about a month is really not that bad to buy or sell a home, right? So now if we go over to it by price point, this is where you can really see the slowdown taking place across the board, right? We're in Q3, we're in September. It already was a slowdown the previous year. So now we're comparing, year over year, what that looks like. And the sold numbers are pretty well down pretty evenly across the board, right? The higher price points, maybe more so than others. Obviously, the ultra luxury is doing what the ultra luxury does, right? Very safe place to put money. If you're going to pay cash for a $3+ million home because you want to park some assets going into, what looks like a little bit of a rocky future, maybe this is a good market to do that. So you definitely see that up there. But outside of that, cost of money is so prohibitive right now, right? So that is where we see the slowdown on the total number of solds. The active units, on the other hand, also kind of diminishing, which really doesn't quite make a ton of sense outside of the higher end, right? So you get over 1 million, more inventory coming on the market. Over 2 million, even more inventory coming on the market. Over 3 million, even more, right? So if you look at it by month supply of inventory, which really just tells us what does it feel like in that environment, it feels like a buyer's market over 2 million. Right? That shouldn't really surprise anyone. Balanced market, I would say, is probably 4 months of inventory or so. I'm sure some of that $1 to $2 million market feels like a buyer's market as well. But you get up into the 3+ million, there's a lot of inventory. But the thing is, it's still moving relatively fast, right? 60 days for 9 months of inventory is relatively fast. So the stuff that's priced right, good location, is done well, is going quickly, and the other stuff is sitting. The other part of this equation, though, is the other end of the market. Under 600,000, we have less than 2 months of inventory. It seems like there's quite the frenzy out there, right? Lots of buyers still putting stuff under contract, even though it may not be as much as before. It's fast. There's not a lot of inventory to choose from, so there's still this kind of market frenzy in the lower end of the market with a lot of our first-time home buyers who tend to be some of the people who don't know better per se, or like they're not sitting on a 3% mortgage, so they are opt to go and buy in a market like this, which is really great for them. Now, here's our sold analysis. You can see kind of where we are this year versus last year and everywhere else. The year over year number is minus 22% down in total solds. The month over month now number was down 17%. So you are seeing a slowdown in the market, partially seasonally and partially tied to those rates that just can't seem to give us a break right now. If you look at average sales price, this is the part that I think is fairly exciting. You get this huge decrease in all this, activity, but homes are selling for an average of, $27,000 more than this time last year. So your year over year number is relatively good, right? We have, an increase in the total value of real estate in the area, but we just are not having as much of it sell. So it just goes to show the resiliency in the marketplace. And you can see there's not really a bad time to buy real estate in Colorado. Some markets are flat outside of that dropping period over the last 12 months we saw, and then we saw that big boom in spring to bring us back up. It's really stabilized and leveled out. And I think that's part of the message we like to put out there is stability in real estate in the Front Range is huge, right? Greater Denver metro area is a great place to buy real estate and hang on to it because you can weather the storm when markets get tough. People are still moving here. We still have a high level of demand. All right, so look at this. This is sold units. This kind of paints the picture pretty well, right? We're still seeing a lot of activity, even if it may feel a little bit slower. Year to date, we're only down about 17.5% now, which is coming up every single month lately, which is good. I think October, November, December will be really telling as to how the year is going to end and how much real estate truly will be doing this time of year next year. So until interest rates change or something, this is kind of where we are, right? This is a majorly reduced level of sales that are taking place, but these sold units are taking place because they're necessity sales, right? We have a lot of divorces taking place where we're seeing no sales. We're seeing a lot of first-time home buyers, people moving into the state, that kind of behavior. So that's what we're seeing most of. Now, if we look over at our percentage list to sale price, this slide can be slightly deceiving right now because even though it's showing 99% list to sale price, because there's not a lot of inventory, it's slightly competitive, there's still a lot of concessions going on in the market. Last month, we saw 45% of all of our deals at Land Title had some sort of concession. So that actually plays into this quite a bit. This probably feels a lot more like a 97% list to sale price instead of 99, but it really depends on the price bracket and the amount of volume of those concessions, right? Let's just say you're at 500,000 and the average concession is, let's call it $10,000 on the home. That really changes this quite a bit, but it doesn't get into the metrics because this is just active price at the time it goes under contract to sold. So it also doesn't take into account those price reductions if there are price reductions taking place in that market. So hopefully that helps. This is Anthony over at Land Title. Don't forget to tune in to the other stuff that I put out by video. If you need other sub-markets, if you want to jump on one of the podcasts or something, take a look at those. Don't forget to like and subscribe to the channel. And thank you for tuning in. We'll see you next time.